Hey guys, Dan here with my trade of the week. Let's break down this 20-point bullish trap setup from Thursday, February 12th during the morning session on the S&P. So this setup was framed off of a fake move, taking a key level shortly after the open, trapping retail traders and selling off. We're going to look at this setup a bit more closely on the footprint chart using the Addis footprint software, showing the logic to enter the trade, exit the trade, and the stop placement. So let's get into it. So before we dive into the footprint here, let's provide a little market context from what we're looking at from a broader perspective, okay? So if we look at this 1 hour chart here with a weekly volume profile on it, you can see that from the prior week earlier, we were coming from a very violent bullish run from the prior week lows, okay? And starting off this current week here, we went right into consolidation mode, okay? So we went from a bullish rally into some tight consolidation. Monday consolidation, Tuesday consolidation, Wednesday tested both sides of that consolidation, and then Thursday we tightened up even further before the opening bell. Okay, so going into the day, I'm looking for one of two things to develop at these extremes of price within this consolidation. I'm looking for price to come on up here, and I'm looking for either failure signatures or acceptance. Same thing to the downside. I'm looking for failure signatures to the downside, or I'm looking for acceptance all the way through it, okay? So with that as a backdrop, when you're coming from a bullish run into consolidation, what do the textbooks teach you to read in this particular instance? The textbooks teach you to look for a bull flag breakout. That's what this pattern is. If you're just strictly a pattern trader, you're looking for a bull flag breakout. So keep that in mind as we roll forward into this particular trade setup. All right, let's move into the order flow. We've got our structure set up over here. We've got our key levels. We know what we're looking for. Now let's move into the actual flow of orders, showing us and helping us qualify potential setups as they develop. All right, so let's dive into the footprint here. So for those of you who have never seen an order flow footprint chart, let's just dissect this here real quick. I know I'm going to oversimplify this for the purposes of this video, but let's just get some basic points underway here. So we've got our open, we've got our low, we've got our high, and we've got our close, okay? So that's your basic candle formation. Now you've actually got some more information within here. You got two columns. You've got your bid over here, and you've got your ask over here. On the bid side, this is where your aggressive sellers transact, okay? And over on the ask side, this is where you have your aggressive buyers transacting. And you can see the aggressive buyers transacting with imbalances get a highlight, okay? So this candle started off real hot, pushed up to the upside where all the volume built up, and then it failed, okay, and rotated back to the downside. This level right here was the overnight high that was set right at 740 this morning just before the open. So if we go back to our roadmap over here where we have our structure and our levels built out, we have our overnight high, we have this 7,000 psychological level, which is also the range high for the week, and we also have our prior day high. So what I'm looking for as the market opens is I'm looking for a weak run into the high, okay? And as we can see, about an hour or so before the market opens, we have a weak run into the high, okay? I'm looking for failure signatures up in here, okay? So as we move forward and the market opens, now we have a bullish run. Okay, we have a bullish run that is relatively weak. And how do I measure weakness? Okay, so I look at the flows of orders coming in and I look down to the delta. And the delta is this top line on your stats bar. And this gives you a sense of magnitude of each candle. So as we were moving up here, you can see the summation of these two columns gives you a sense of magnitude. If you subtract the two columns, you're going to get on this candle we just talked about, positive 706. So 706 more aggressive buyers and sellers were in this candle right here, and they failed to move price any further, okay? So let's go to this candle. Let's go to the opening candle. We have 550 more aggressive buyers and sellers, and on 37,416 contracts, that's pretty minuscule, okay? So here's another weak push to the upside, okay? Next candle, you have essentially a neutral candle that did pierce a little bit higher, but with negative delta, okay? So now let's move to our key candle. I highlighted this candle for a very specific reason because this was the key candle. So now as price pushes up into our very first area of interest, which was the overnight high. Okay, we pushed up into it. That's where things started to get interesting. Okay, so as price pushes up, you can see we opened here at 69.8750, pushed up real hard. Okay, and you can see the block orders up here that trapped up the retailers. Okay, so you have 311 aggressive retailers hitting the market order, selling into passive sellers, selling into this aggression. Okay, the aggressive market retailers failed to reclaim this level. They failed. Okay, and as a subsequent, since they failed, price moved on back down. And when price moved on back down, you can start to see their their stops get triggered. And then you can see right in here through the order flow, you can see where the institution started hammering down the throttle. Okay. So this candle opened up. This is the power of order flow right here. You see price come on up. You can see the trap. You can see the failure, and you can see the change in control happen in real time right here. Boom, boom, boom. In this one singular candle right here. Trap, change in control. Aggressive buyers pushing up, fairly weak, I'll admit, but there were still some aggressive buyers pushing price up. Aggressive retailers pouring in, trying to play this breakout pattern, this bull flag breakout that you see right here. Aggressive bullish rally into consolidation, and we're looking for a breakout into the high for that next leg. That's these guys right here. Okay, they failed. And as they failed, you can start to see the institutions selling into that aggression, pushing price down. This candle opened up with a positive 476 and finished with a negative 1817. That shows a true change in control and a breakdown of VWAP and these opening range lows. Okay, so with that, we're now sitting at 8:40 in the morning. This is 10 minutes after the open. And so I see this take place, and I have a sell stop hanging out just down here. As soon as this candle opens and pops to the upside, my sell stop goes into place at these lows. So we come up here, I see a flash of green, and I see a 0, and price move away from it. That tells me we are absorbing and pushing all the way back down. Okay, so now we break the lows, and off the races she goes. Sellers come pouring in, pushing this market even further, negative 1322. A small little pullback here, positive 22, failing to reclaim VWAP, failing to really have any horsepower whatsoever, and then down she goes for another leg. Okay, I took some partials about halfway down. Keep in context the structure here. We failed these range highs, and I'm looking for it to take out the range lows, which is my target, 69.57. Okay, so as we walk this forward a little bit, you can see I've got partials, I got money in the bank, partials taken right here, and we have some oscillating action. We have some bulls trying to step in that again failed and got trapped. Okay, price did end up pushing up on some aggressive bulls that came into the market and failed to reclaim VWAP. Failure, failure. Look at all these zeros. Failure, failure. No more aggressive or no more passive buyers able to lift the market, and we stayed and remained below VWAP. And then here comes the flush. Okay, and that flush takes us all the way down to target where I exit for about a 20-point run on this trade. So let's recap this trade here for a second. So we set up our structure right here. We were in consolidation for the balance of the week, heading into that Thursday morning session. So we have range highs up in here, and we have range lows down in here. Okay, anywhere in here we were looking for failure signatures, or we were looking for price acceptance signatures. Okay, so scroll forward to about an hour before the market opens. We set that overnight high on a weak run. We come back to it off the open on another relatively weak run, trapping up some retailers playing a breakout. Okay, this is your trap. We trapped them up at a key level that was taken. We took out a key level, trapped up some retailers, and then the institutions flushed the price back to the downside. This is your institutional trap. Okay, you can see the traps here, and you can see the candle flip, and you can see their sell stops get taken out, or their stops getting taken out, and then the institutions hammer on the throttle back to the downside. In this instance, we were looking for failure up in here for a value area rotation back to the downside, and that's exactly what we got here. This is the power of the footprint chart, being able to read the flows of orders as they come in at key levels. Okay, I hope this was helpful. We'll see you guys over in the next video.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.